Hello, my name is Jacob Fischer, and I'm going to be going over the financial analysis of Amazon.com. Let's get into it. Okay, a little introduction about the company. Amazon.com is one of the largest online retailers in America and even the world. Their ticker symbol is AMZN, with the current share price for one stock is around $94.08 at the time of this recording. Industries that are included in the Amazon brand are multinational tech, e-commerce, artificial intelligence, digital streaming and cloud computing, and so much more. The beauty of Amazon is it's so big, it's diversified into multiple sectors where it can have multiple streams of income. With all these multiple sectors, there's tons of competitors. I only have the four major ones up here. Here we have Alibaba, which is like the Chinese version of Amazon, big online retailer in China and Asia, where they sell cheap products. Next, we have Walmart. They have a large retail presence in person, but they also have a large online retail presence in America. Next is Netflix. Netflix is a video streaming service directly competing with Amazon Prime. And then lastly, we have eBay, which is a third-party seller platform where people can sell their products and goods. Just to get you acquainted with the brand of Amazon, little back history on it is it was started in 1994 in Bellevue, Washington. And this company was started by none other than Jeff Bezos. In the early years of Amazon, their sole purpose was to only sell used books online. And in 1994, this was kind of a revolutionary idea because the online www.com market was very new and not very tapped into. So Jeff Bezos took advantage of this and started selling books online. And obviously it has grown into the giant it has today by expanding and selling more products. A quote by Carmelie at Start.io says, Amazon is ranked as the world's most valuable brand, worth nearly $640 billion in 2021. Okay, here we have the annual net sales of Amazon and the target market that they are a part of. So as you can see, the light blue is the United States. It's obviously the favorite for the number of sales that are in the billions for Amazon. Closely behind, actually not closely, but is Germany, UK, Japan, rest of the world. But the main focus of Amazon is targeted toward the American audience. So most of its promotional and retail efforts will go towards English and Spanish speaking people because that is the majority of where its sales come from. Okay, now we're going to get into income. So here's the income statement of Amazon. And this is pulled from the 10K reports on the SEC website of the latest 3 years of Amazon. There wasn't 2022 on there. So 2021 was the most recent year I could find. So let's just go looking at 2019 first. The total net sales are right around $280.522 billion. Going down to operating income at $14.541 billion. And the way you calculate that is by subtracting the sum of the operational expenses from the total net sales. The net income is $11.588 billion in 2019. And that's calculated by adding the operating income, the total non-operating income, the provision for income taxes, and finally the equity method investment activity net of tax. Okay. And obviously this is calculated the same for 2020 as well as 2021. But two key areas to watch in determining growth are total net sales and net income. So which is up top here, and then net income down here. As you can see, Amazon's net sales have increased over year. As you can see, it started at 11 billion, next year 21 billion, next year 33 billion, which is unheard of pretty much. This results in net income ultimately increasing each year as well. Amazon's net income has nearly tripled to nearly $33 billion. Well, like I said, this is extremely unheard of as the growth potential of this company is exponential at this point. A quote by Cuofano from 4-Week MBA says, online stores have contributed almost 43% of Amazon revenues. The remaining was generated by third-party seller services and physical stores. Amazon Web Services, or AWS, is also growing in percentage of sales for Amazon at about 20% of total revenue. All right, on the cash flows. So as you can see at the top of the sheet, there is the cash at the beginning of the period, right here. And this number is taken from the cash at the end of the period from the previous year. So as you can see, this $42 billion is taken from this $42 billion. And this $36 billion is taken from this $36 billion. Pretty self-explanatory. Next on the list, we have net income, which is right here. And that is taken, now the figures from the net income are taken directly from the calculated net income in the income statement, like I showed earlier. So the first category is operating activities. It starts out with adjustments and then goes into the changes in assets and liabilities. A key focus point to look at over the 3 years is inventories and accounts receivables, which is right here and right here. So those are key things to look out for. As you can see, the deficit grows larger from 2019 to 2021. This being said, there's actually a smaller amount of accounts payable in 2021 compared to the previous 2 years. Largely because of these sections, the net cash provided by operating activities is not an even increase from 2019 to 2021, as you can see. Rather a jump in 2020 and then a back down in 2021. Okay, here we have the second category of the statement of cash flows, which is investing activities. Looking at the purchases of property and equipment, it is clear that there is a new focus on building more and bigger facilities over the past 2 years, as you can see in these larger numbers compared to 2019. This hurts Amazon in the short term, but will likely end up benefiting them in the long run. With more money invested back into making the company more efficient, its potential for increased sales skyrockets. And then here we have the final part of it, which is financial activities. Amazon has shown dramatic improvement in the total net cash provided by financing activities. In 2019, the total was negative at $10.66 billion negative, as you can see here. And then it jumped all the way up to $6.291 billion positive, which is roughly a $15 billion jump in only 3 years. Moving on. Ratio analysis. All right. So as you can see, here are tons of different ratios comparing Amazon's ratios for the past 3 years, also pitted up against two of its competitors, which are Wayfair and eBay. And then we also have the industry standard on the far right. So ratios help a company analyze where the company's strengths and weaknesses are, especially compared to the companies in similar fields. There's no hiding in the ratios. It's really clear the financial analysis, the financial health of a company through its ratios. So first off, at the top, we have liquidity ratios. Investopedia says liquidity ratios are an important class of financial metrics used to determine a debtor's ability to pay off current debt obligations without raising external capital. That's by Hayes and Investopedia. So looking at the current ratio for Amazon, up top, the number in 2021 is 1.14. The higher the current ratio is, the easier it is for the company to be able to pay off short-term debts. A good rule of thumb is if a company is below a current ratio of 2, there should be some concern. Anything over 2 is considered fine. So comparing Amazon to its competitors, it has the lowest current ratio as well as quick ratio, which is not good news. The good news, though, is for Amazon's liquidity ratios are similar to the industry average at 1.32. Okay, on to leverage ratios. Leverage ratios compare the company's debt to other key accounts in the balance sheet, income statement, or statement of cash flows. A quote of this is, "These ratios provide an indication of how the company's assets and business operations are financed using debt or equity," and that's by the CFI team. A good business operation, a good debt to total assets ratio is anything under 1. So here we have Amazon's 2021, it is under 1, which is good. So luckily in 2021, Amazon's was 0.67, like I said before. This is better than Wayfair's, but slightly worse than eBay's. Next quote is, "An activity ratio broadly describes any type of financial metric that helps investors and research analysts gauge how efficiently a company uses its assets to generate revenues and cash." And that's by Kenton. Higher activity ratios are ideal because it shows that the company can easily and quickly turn assets into liquid capital. Looking at just the first one, inventory turnover, it's clear that the spread across companies is pretty volatile, all the way from 0 in eBay to 162 at Wayfair. So inventory turnover is dramatically different. A key note is that eBay's inventory turnover is 0 because it doesn't have any inventory. It focuses solely on third-party online transactions. And then we were talking about Amazon's inventory turnover, which is relatively low compared to the industry average of 61. As you can see here, which is the current 9.65, industry average 61. Finally, we have profitability ratios right here. A quote from Tally is, "The profitability ratio shows how successful a business is in earning profits over a period of time in relation to operation costs, revenue, and shareholders' equity." And that's by Tally, like I said. Out of the profitability ratios, the margin ratios, which are the top three, are the most significant because they give good insight into how the business converts sales to profits. Amazon's current gross profit margin is 42.03%, as you can see here, which is not bad, but not the best. A good range for a company in this sector would be anything above 50%. Amazon's competitors, Wayfair and eBay, both have higher gross profit margins than Amazon at 72 and 75%. So a good operating profit margin, which is the second one in profitability ratios, is around 15% or higher. The operating profit margin is found by dividing the operating profit by the net sales. Although Amazon's operating profits is much lower than 15, it is still higher than the industry average of 3%. So we're right at 5%. The net profit margin is another key ratio to look at, especially when determining the health of a company. The net profit margin divides net income by net sales. It measures the percentage of the net income that is generated compared to its sales. Amazon does exceedingly well in this area, with current net profit margin of 7.10%. This exceeds the industry average of 2%. So this is a whole 5% higher, which is huge. Okay, moving on. Market valuation. Okay, the Motley Fool says, considering Amazon's market cap sits at 1.02 trillion, the rest of the retail business is only worth about 220 million. That means its retail business is only valued at 0.5 times sales, which is severely undervalued because the other retail giants like Walmart is 0.66 times sales and Target is 0.7 times per sales. And that's by Drury at the Motley Fool. Taking this into account, it would be a wise time right now to purchase Amazon stock. It has a lot of stability because of its size and has continued to prove its revenue can increase. On the right here is the 5-year outlook of Amazon stock. As you can see, it's been rising in 2021, and then recently it's been declining, and I'll talk about that later. But like I said earlier, 0.5 times sales, which is pretty low compared to its competitors, so it'd be a good time to buy. All right, moving on to the strengths. Now, Amazon being such a big and diversified company, it has a numerous amount of strengths. I just have 4 listed here. The strengths include brand recognition, which is how many people actually know the symbol and logo of the brand, which is a large amount of Americans. The second strength is a wide range of products offered. Like I said, it's very diversified. Amazon has acquired over 100 different companies over its lifetime. Some of these I can include are Whole Foods, Audible, iRobot. They bought some major film companies for Amazon Prime and are continuing to diversify in space programs as well. So with this great diversification and brand acquisition, make more streams of income more readily available to Amazon, which increases the stability. So if one sector of Amazon goes under or doesn't perform as well, it has 100 other sectors that can help build it up, which is extremely smart. It also has great distribution channels. They're Amazon's 2-day shipping with Prime has been a leading standard, and even getting down to 1-day shipping is becoming common among Amazon Prime users, which is the leading industry standard. All right, so all strengths must come with some weaknesses as well, and I'm going to talk about that briefly right here. So I think their biggest potential hindrance in the reliance on small businesses that sell their products through Amazon.com. What I mean is Amazon's e-commerce platform is its primary source of income, generating almost half of their total revenue. If these sellers all decided to boycott Amazon for some reason, they would be in big trouble. But a way to combat this from happening is giving generous margins to its third-party sellers, as well as additional benefits like data insights for its products. This would keep a tight bond between Amazon and the third-party sellers. My second point of weaknesses that I stated is that it would be hard for a massive company to remain reliable to the everyday remain relatable to the everyday person. Big corporations often seem distant and impersonal to customers, and this can eventually hurt brand recognition and PR with its customers. All right, future prospects. I believe that the future of Amazon is for the most part pretty bright. I think it is super smart that they have diversified its products and services offerings to many different industries. This being said, I have a strong feeling that Amazon's online retail platform will slowly die off. I think that Amazon has taken advantage of its brand recognition a little too much. Now, for most items I have personally searched for on the internet, Amazon is now not the cheapest option anymore. This being said, I think older people will still use it a lot because they know Amazon works and it is reliable and they don't like change, so they're willing to pay a little bit more. But my prediction in 10 years is that Amazon's online retail will be just about dead. In the long run, I think this will not hurt the company too much because I believe its other offerings will grow in popularity in the coming years. Services like AWS that I touched on before, Amazon Web Services, and Amazon Prime will most likely be the leading cash cow for Amazon in the years to come. Although I could only find the 10K reports of 2021 and earlier, looking at Amazon's stock performance in 2022, it was not so bright. Amazon has been down 34% this past year of 2022. But that being said, I believe now is the right time to invest because I believe Amazon has a strong enough infrastructure to bounce back. And this is the stock performance of the past year. Okay, biblical worldview. Amazon is doing very well financially at this moment. Although there's a time for celebration inside the company, it is crucial not to be prideful. Instead, God calls us to be humble because in reality, life is like the flowers of the field. It's beautiful, but it's gone before you know it. This verse up here, 1 Peter 5:6-7 says, "Humble yourselves, therefore, under God's mighty hand, that he might lift you up in due time. Cast all your anxiety on him because he cares for you." This verse is a call for all to remember that the needs of others and not to think too highly of yourself. James wrote, "Religion that God our Father accepts as pure and faultless is this, to look after orphans and widows in their distress and to keep oneself from being stained by this world." That's James 1:27. And then Jesus said, he will reply, "Truly I tell you, whatever you do not for one of the least of these, you did not do for me." And that's Matthew 25:45. Basically what I'm saying is, although Amazon is such a big company, they need to look out for those in need and be humble, because if not, God will destroy them. Okay, here are my sources, and sources continued. So thank you so much for listening to my financial statement analysis of Amazon.com. I hope you enjoyed and have a great rest of your day.